Hi, good evening. This is Talking MT, and today I'm going to show you how I use my time for monitoring my trades and uh, controlling a risk. This is Volatility Index 75, and this is a 12-hour chart. We can see that price already rejected this rejection block. Those who understand the rejection block, it is the most recent up close price. It forms a swing high, and once price comes back that swing high but does not break the high, it is regarded as a rejection block, and it's coming to this fair value gap high, fair value gap low. That's where I'm anticipating that price should be coming back to. And if it comes back, I'll be just checking that, maybe fearing this imbalance. It might not fill it completely. Now, going to the hourly chart, I can see the price section like this. Price rejected to the 12-hour rejection block, and on a hourly chart, it reacted to this favorite gap. I was not present when this kind of price action was occurring, but I'm now using this price action for entry, and I will show you how you can go for a trade setup like this and make a very nice entry. And maybe some will say I'm chasing the price as it's coming down into here, but this is how I trade. Every trade setup is tradable. What you need is risk management. I will show you where my limit order is placed to. So now you know the bias that it's now bearish coming to this high, and we have the bullish order block here on a hourly chart. Let me mark that. We have now a bullish order block on a hourly chart. So this is highly probable. Why? It's just in respect to the 12-hour PDLA, that is the favorite gap high. Let me mark it here. 12 favorite gap low. It's the favorite gap low. Low. I think you saw that when I was using the 12-hour favorite gap low. So now once you know the price should be coming here and the overall trend is bearish, you can pick a trade like this and exit as it's coming to this very short level. How do you pick a trade? Let's go to a 15 minutes chart. This is a 15 minutes chart. Price action is not clear. Now I go to, it's clear in case you understand it, but for me, for entry, refined entry, it's not yet clear. I go down into a 5 minutes chart. Now see, into a 5 minutes chart. On a 5 minutes chart, remember that fair value gap on a hourly chart. And now on a 5 minutes chart, we have another fair value gap. This fair value gap that I am marking. Maybe let me mark it like this. This candle is low and this candle is high. Mark the fair value gap. You know what a fair value gap is? It's a price imbalance. It's a price imbalance. This single down close candle that was here, it just did not, was not traded back. Now, for the time when I was marking this, it was not yet traded back, and I wanted to be short as it's coming back into this fair value gap, as it fills the fair value gap and the bearish order block. You can see that the bearish order block plus fair value gap, and this is the highly probable fair value gap. I mean bearish order block that I'll use for entry. And I will not be allowing price to come and break this high, because I'm using this as a reference point or point of interest. Some call it a point. So I did not execute that trade since I saw price did not even reach this favorable gap. I mean, uh, bearish order block low. So I just let the price go. Now it went and now broke this short term low. That is the breaking market structure, and now it's a pullback, and we want to trade as it's pulling back, since we know the high time frame market structure is bearish. So we want to be entering short as it's coming back into the favorable gap one more time, because it made it. This is like a drilling and my institutional order flow. I mean, institutional order flow entry drill into this favorable gap and this shallow. So we want to see a price crossing bullish into this favorable gap. That's when it's a balanced price range. And now once it crosses bullish, we can now use that as a balanced favorable gap, and then we can say short, continue with our trend. Now I'll show you how it's coming there, and then show you how you can monitor a trade. Now what on a 1 minute chart, 1 minute chart, we can now see a 1 minute chart. It's breaking market structure here. This swing low was broken, and now prices reversing to the upside. And now on a 5 minute chart, favorable gap. So we don't care if it will or will not come back here, since we shouldn't fear missing this trade. Now the reason why I should not allow price to break this high, it's because above this high there is a buy stop, buy side liquidity, and kind of a favorable gap around there. So I should not be allowing price to come back and cross above this high. So that's it. Let's watch. So as you can see, price is now leaving that favorable gap, and we missed the trade, and we're not scared about it, since we already know that price is likely to go to where it wants to go very quickly. So it's fine to have that, and then iterate your order. Don't chase the price. Bye bye, and then meet you next session, what it will be very green. Thanks, and bye bye. This is Talking MT Beyond the Limits.